Before you turn your primary residence into a rental property, there's one big decision that could cost you tens or even hundreds of thousands of dollars in taxes if you get it wrong. And honestly, most accidental landlords have no idea this rule even exists until it's too late. Today, I'm breaking down one of the biggest financial and tax strategy mistakes I see homeowners make every single day here at Freedom Property Management. If we haven't met yet, hi, I'm Tiffany Izenour, broker and owner of Freedom Property Management here in Northern Virginia. We work with landlords every day, especially accidental landlords, helping them navigate the transition from homeowner to real estate investor. And one of the most important conversations we have is about the long-term strategy for that rental property. So today we're going to talk about tax strategy and IRS rules. Now, full disclosure, I am not a CPA, not a tax advisor. I highly encourage you to consult your CPA, your wealth advisor, before you make any big financial decisions, such as turning your primary residence into a rental property. One of the biggest decisions you need to make before turning your primary residence into a rental is this. Is this a short-term strategy or a long-term strategy? In other words, are you planning to rent the home for 1 to 3 years and then sell it? Or are you planning to hold this property long-term for cash flow and appreciation? Because your strategy around that property should look completely different depending on the answer. And this becomes especially important when we start talking about capital gains taxes and IRS rules. According to IRS Section 121, when you sell your primary residence, you may qualify for capital gains tax exclusion of up to $250,000 for individual or up to $500,000 for a married couple who files jointly. That's potentially $500,000 in tax-free profits when you sell your primary residence. But here's where many homeowners get blindsided. Once your primary residence becomes a rental property, the IRS now views that property as a business asset. It's not simply your home anymore. And eventually, when you sell it, the tax treatment changes. The key rule you need to understand here is what's commonly called the 2 out of 5 year rule. To qualify for the primary residence capital gains exclusion, the property must have been your primary residence for at least 2 of the last 5 years before the sale. Those 2 years do not need to be continuous. They can be on the front or the back. So what this means for an accidental landlord is you potentially have up to a 3-year window after moving out where you may still qualify for that primary residence tax exemption. But once you move beyond that window, once 3 years and 1 day have happened, things change significantly. Let me give you 2 very common life examples that we see here at Freedom. A homeowner relocates for work, decides they need to rent their home for 2 years before selling or maybe moving back into it. Because they're still within that 2 out of 5 year IRS window, they may qualify for that primary residence exclusion and potentially avoid taxes on that profit. Now compare that to someone who keeps a property as a rental for 6, 7, 10 years before selling. And at that point, the IRS is generally treating that property fully as an investment property, which means capital gains taxes, depreciation recapture taxes, all that becomes part of the equation. Now, obviously, this is not tax or legal advice. Again, you should be talking to your qualified CPA before you make any of these decisions. But as a property manager, we see homeowners accidentally create major tax consequences simply because they didn't understand the long-term implications before they converted their home into a rental. If you're thinking about turning your primary residence into a rental property and want help building the right strategy from the beginning, reach out to us here at Freedom Property Management. And if this video was helpful, make sure to like, subscribe, and share it with another homeowner who may be considering becoming a landlord.